Hello, hello. Dan and Brian here. Hi, Brian.
Hello, hello.
Today we're going to talk about taxes. Wait, what? Taxes? Taxes in December? Yes. As December is the last month of the year, it's helpful to have a good idea of where you're going to be come April 15th. All too often, we see folks taking the religious approach, praying and hoping, and we all know hope is a place in Arkansas, that come April 15th, there won't be a let's see how we did, followed by you owe mucho dinero and have weeks, if not days, to cough it up. For over 25 years at WMGNA, tax planning begins January 1st. As our bright and talented president and CFO, Brian P. Beck, reminds us, quoting, your taxes affect everything you do, and everything you do affects your taxes. Starting as early as October until the end of the year, we do tax approximators with our CPA strategic professionals to figure out what the year will look like, make sure no tax stone is left unturned, and give us a fighting chance to max out tax optimization strategies. This is what we call tax out financial solutions. If subscribers are likely going to have to write a check come April 15th, we do have 5 to 6 months to figure out where the money is going to come from, as well as mitigate or eliminate onerous penalties and interest. One thing we are seeing this year, far more so than any year in recent memory, is that folks are going to face record capital gains, which means potentially large unplanned for taxes come April. Brian, could you please share a short story of a restyled couple that you just did a tax approximator for and got a big shock?
Oh, absolutely, Dan. And the clients were a little shocked. Unfortunately, I had to deliver the bad news right after Thanksgiving. So a joyous time turned into not so joyous of a time. However, there was a happy ending. With our tax out financial solutions planning, we saw that the clients were going to owe around $20,000 of federal and state income taxes in addition to all the withholdings. So not too bad. However, when we got the projected capital gains on their mutual funds that they invest on their own, we were shocked to see an additional $70,000 in capital gains, which meant another $14,000 in taxes. And 7 of their mutual funds had yet to declare their capital gain distributions. Sidebar, holding mutual funds in taxable accounts is usually not a good idea, but that's for another podcast. Oh boy, both of them were not too happy. Their biggest concern was they made all this money in the stock market, yet haven't realized any of the gains, and they still must pay at least $35,000. And there was very little that we could do, and they were still at the mercy of their mutual funds. After explaining why this happened, I told them that the good news was they have about 5 to 6 months until they must pay the taxes, and we can easily develop a plan. Frustrated that they made all this money and nothing to show for it except on paper, I recommended the following. Let's wait until January and sell a combination of their investments to pay for the $35,000 in taxes. Plus, let's take another $40,000 or $50,000 and put it into savings. Take some of those gains to spend it on whatever they wanted. This way, we will avoid potentially the double whammy. What is the double whammy, you ask? This is not knowing how much you owe in taxes until April 15th, and then having to sell your investments with the markets potentially in a free fall. This, my friends, is known as the double whammy. So even though the clients will still owe $35,000 in taxes, we developed a plan to cover that and take some money for themselves. A joyous Thanksgiving in the end.
Great stuff, Brian. Yeah, avoiding that double whammy at tax time is a big win. You the man.
Thanks.
We are confident we can do the same for you and your family. Show you how tax planning can help you turn tax season from a potential nightmare, or even worse, the double whammy, into a non-event. Tax out financial solutions. We figure it out. If you or someone near and dear needs to figure out how tax season can be a non-event, call our office and speak to Beth at 860-679-5255 or email her right now at beth@wmgna.com. And remember to pass along this podcast to other folks who want less of a hassle when it comes to tax season.